How's it going, everyone? My name is Dan, but you can call me Malone, and it's about time we asked the question, what happened to crypto? Just 12 months ago, the cryptocurrency market was valued at $3 trillion, an all-time high. Everyone was talking about crypto. Cryptocurrency exchanges like crypto.com and FTX were securing multi-million-dollar endorsement deals with the likes of Matt Damon and Tom Brady. Meme coins like Shiba Inu were the talk of the town, as they inspired hope in becoming an overnight crypto millionaire. And there was an apparent sense of community around cryptocurrencies being formed online. Fast forward to today, and that same crypto market is valued at just over $900 billion, a 70% decline from its high. Google search activity for the word cryptocurrency has also tanked alongside the market. So what happened in the space of 12 months for the market to lose $2.1 trillion and the majority of its online traction? That's what we're going to be talking about in this video. But before we do, leave a comment down below with your thoughts on the collapse of the crypto market and why you think it happened. If you do find this video useful, show your support by leaving a like, and don't forget to subscribe to see more personal finance content from someone you can trust. Let's get into the video. Alright, so the first thing I want to talk about is hype and its role in the popularization of crypto. There was an ungodly amount of hype back in cryptocurrencies throughout 2021, which led to many regular people investing, people who otherwise wouldn't have gotten involved if there wasn't any hype. And it wasn't just crypto, but also other offshoots of blockchain technology like non-fungible tokens or NFTs. The leading contributor to this hype, in my opinion, was celebrity endorsement. There is no better example of this than Matt Damon's campaign with crypto.com, where the tagline for the advertisement was "Fortune favors the brave." I can't underestimate how irresponsible this marketing really is for a product that enables cryptocurrency investing, because what you're doing is selling consumers the idea that they should be brave and take on the risk associated with cryptocurrencies under the pretense that they'll become wealthy from doing so. And worse yet, you're paying an A-list celebrity to deliver that message on your behalf. It was a similar situation with Tom Brady and FTX. The tagline for that advertisement was Tom Brady saying, "I'm getting into crypto with FTX. You in?" Again, selling consumers on the idea of investing in crypto by telling them that the rich and famous are doing it. All of this created FOMO, fear of missing out. An article by Bloomberg in August 2022 highlighted that between the dates that the adverts with Matt Damon and Tom Brady aired and the date of the article, the price of Bitcoin had fallen by more than 60% and 35% respectively, meaning any consumers who decided to invest in cryptocurrencies because of those adverts would have lost a significant amount of money. And you can imagine just how many people decided to throw their hat in the ring because of those ads. I'm not saying that Matt Damon and Tom Brady are personally responsible for the losses of crypto investors. We're all adults and we're all capable of making independent decisions. While I would question the ethics of their decision, I'm not so naive as to think that it's as easy as just saying no to corporate endorsements when we're talking about millions of dollars for virtually no work. However, it must be acknowledged that these ads played a major role in the hype which surrounded cryptocurrencies at their peak. As bad as the crypto.com and FTX adverts were, they arguably weren't nearly as bad as the individual touting that some celebrities did for financial gain. Kim Kardashian was recently ordered to pay a $1.26 million fine for promoting Ethereum Max without disclosing that she'd been paid $250,000 to do so. Kim was sued alongside Paul Pierce and Floyd Mayweather by the investors who lost money as a result of the misleading promotion. What's crazy is that their lawyers had the audacity to ask the judge to dismiss the lawsuit on the basis that Kim, Pierce and Floyd weren't financial experts, essentially advocating for celebrities to have zero responsibility for the financial products which they're paid to promote to their millions of followers. And these are just the celebrities who've been fined. There are countless more examples where people of influence promoted cryptocurrencies and NFTs for financial gain. So this kind of activity, along with relentless news coverage and discussions online, led to a massive sense of FOMO towards cryptocurrencies among the general population, to the point where I couldn't go one day without receiving a message in a WhatsApp group chat about crypto. Every single one of my social circles all of a sudden had at least one person who invested in crypto. And bear in mind, these are people who until now hadn't even considered investing their money. We're not talking about savvy investors. We're talking about regular people with little to no prior experience in the financial markets. And their first experience with investing was in one of the most highly volatile asset classes in existence. Most people were totally oblivious oblivious to the risks associated with cryptocurrencies. Some of them understood the risks but didn't care because it was all about that sliver of hope, that 0.01% chance that they would get rich quick. This is the reason why the average person was investing in crypto in 2021. But when things started to turn sour and that sliver of hope began to fade, those same people would be the first to go and the traction would disappear completely. You see, the downfall of crypto was the exact same thing as what made it popular in the first place. It's a speculative asset. Its value is totally dependent on supply and demand. When times are good and there's hype, demand outweighs supply, causing crypto prices to increase. But when times are bad and there's uncertainty in the air, everyone rushes for the exit, causing prices to plummet. You might be asking, isn't that the case with the stock market as well? Yes, it is true that stocks have been suffering, with the likes of the S&P 500 down over 20% since its peak. But that's nothing in comparison to Bitcoin and Ethereum's losses in excess of 60%. And that's just the prestigious coins. We haven't even mentioned the losses of lesser known coins. What about NFTs? According to Bloomberg, NFT trading volumes have collapsed by 97% since January 2022, falling from 17 billion to 466 million. Influencers like Logan Paul have taken big losses on NFTs purchased during the bull market. One NFT that Logan purchased for over $600,000 is worthless today. To Logan, that loss represents an opportunity to make more money, but that's a luxury that most regular investors don't have, which would make you question why any regular investor would think that they have the same capacity for risk as the influencers who were promoting these NFTs. In any case, comparing stocks to cryptocurrencies and NFTs is no comparison at all. A stock represents an investment in a living, breathing corporate entity which produces cash flow. Because of that, it's possible to arrive at a fair price that you'd be willing to pay for a given stock. Cryptocurrencies and NFTs don't produce anything. They currently are how they always will be. For that reason, it's not possible to arrive at a fair value for crypto. So you just have to hope and pray that someone at some point in the future will be willing to pay a higher price for your crypto than what you bought it for. With that understanding, it becomes clearer as to how worsening global economic conditions contributed to the collapse of crypto. The global economy in 2022 can be described with one word: inflation. Inflation has prompted global central banks to increase interest rates in order to slow consumer demand and regain some control over prices. An increase in rates is nearly always bad news for risky investments, crypto included. That's because safe investments like government bonds are now offering investors a higher guaranteed return on investment. The reason why I'm air quoting is because I use these terms loosely, but the point remains. When rates are rising, money rotates out of riskier investments and into investor safe havens like government bonds. It's obviously not Tom, Dick, and Harry who are selling their crypto for this reason. It's the whales, the institutional investors. And when they sell, that in turn leaves Tom, Dick, and Harry holding the bag, only to then sell at a larger loss later. Rising rates also adversely impact stocks on the stock market, with growth stocks, that is, companies who expect the bulk of their earnings to come in the future, being the most severely impacted. That has to do with the relationship between stock valuations and interest rates. Given that the stock market and the crypto market have become increasingly correlated, it's more or less a given that crypto is going to feel pain when stocks feel pain, but to a much larger degree. Why? Because unlike stocks, crypto has no intrinsic value. It doesn't generate cash flow and it's non-productive. Plus, if you consider that central banks are increasing interest rates to limit consumer spending, clearly that's going to have an impact on crypto demand and crypto prices. We could end the video here by concluding that the reason why the crypto market has collapsed is because investors made bad investment decisions based solely on hype. And when those decisions were challenged by difficult economic circumstances, the true extent of just how bad those decisions were was unveiled. But there are some other points to address. There is an inherent lack of trust, not just in cryptocurrencies, but in the entirety of the Web 3.0 ecosystem. For the onlookers, those who aren't constantly in the loop with what's going on in the world of Web 3.0, it feels like the Wild West. How many more news stories do we have to see about crypto being stolen from wallets? About celebrities running pump and dumps on coins and NFTs and getting away with it? Or about major players in the crypto space suddenly collapsing? As I'm recording this video, someone was able to make a searchable website where you could see personal identities and the value of the crypto holdings which those identities lost in the recent collapse of Celsius. Such a severe breach in data privacy shouldn't be happening in this day and age. Full stop. If blockchain technology and everything that comes with it is going to be a feature of modern life going forward, there needs to be much stricter regulatory supervision to prevent things like this from happening. The EU has just passed the Markets in Crypto Assets Regulation Bill, or MiCA, which is working towards stricter rules for everything associated with crypto. Anyone who is against the regulation of crypto is living in fairy tale land and doesn't understand how financial systems work, nor do they understand the risks that unregulated financial assets can pose to the global financial system. Don't get me wrong, I believe in blockchain technology as much as the next person, and I want it to succeed. But in order for it to sustainably succeed, these issues need to be resolved, and how they're resolved is through regulation. If I was to summarize why the crypto market skyrocketed during 2021 and crashed during 2022, I would say that it was the result of investors trying to profiteer from an industry in its infancy. The profiteering was made possible through a combination of an ungodly amount of hype online, a willing investor with excess cash in his pocket post-pandemic, and insufficient supervision on the part of regulators. This culminated in a $3 trillion crypto market, which frankly was totally unsustainable. The extent of that unsustainability came to light with the challenges faced by the global economy, namely inflation, rising rates, an energy crisis, and an all-out cost of living crisis. That has brought the crypto market to where it is today. Who knows what the future has in store for crypto, but for now, you'll have to look elsewhere for that early retirement. Speaking of which, if you're looking to retire early through investing alone, you'll need to check out this next video. There's some hard truths that you need to face. I'll see you soon.